What's up everybody? Welcome to the Stocks channel. My name is Corey and today we see a continuation of the bullish bounce with that second day confirmation breakout. Are we about to see SPY at brand new all-time highs? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were up about 0.25% and we did get that second day confirmation close back above the 20 simple moving average. So you can see very quickly we're very close to regaining the full bull trend right as we're about to break out to a brand new closing all-time high. So the previous closing all-time high was right here, right around 470, and you can see that was resistance today. So once we break out from the previous all-time high, it's very likely we're going to start running to the next price target at 477. So pay attention to that critical breakout level right around 470. Now, if we do start to pull back from here, your critical support level is going to be right on top of this gap, which is our 20 simple moving average at 464. Assuming we're going to break out and we're going back to new all-time highs, I would expect that to be the most critical support level. However, if we start going down into that gap, you want to look for support at 462 and the full gap close just below 461. And if we start closing that gap and continue to go lower, you're looking for the last line of defense at the 50 EMA at 457. Like I told you with the second day confirmation of the bullish breakout price action, I don't expect to see SPY breaking below 464, but always be prepared for all scenarios. Like I continue to tell you, don't worry about the low volume because the bulls take the stairs up, which means we'll go higher on low volume, and the bears take the stairs down, which means you'll see big selling red days. Go back and look at the volume in October and November in this very impulsive bull rally, and you can see how low the volume was. So don't just assume you need to see high volume buying to get bullish. The price action is screaming bullish and we're about to have the full bull trend. And as I showed you last night, the weekly chart still looks incredibly bullish, so you still want to remain a bull in this bull market. So SPY is very simple right now. Look for that critical support at 464 and the price action breakout at 470 to start running to our new all-time high price target at 477. Jumping over to the NASDAQ 100 triple Qs, you can see we're up 0.45% today, and again the second day confirmation closed back above the 20 simple moving average and very close to regaining the full bull trend. So we're seeing bullish price action and we're about to have the full bull trend after we did get that resistance trendline breakout. So we're getting very bullish price action with the most critical resistance next at 401. On a break above 401, we're going to brand new all-time highs with a price target at 410, and we could still go higher than that to our next price target at 415. So everything is looking bullish across the board in the indices as long as we stay over these critical support levels. For the triple Qs, your critical support is right around 394, the top of the gap at 393, and the full gap close right around 388, and I expect to see the triple Qs staying above all of these levels. If we start breaking below those levels, get a lot more cautious, but right now we're looking bullish, so expect to see support holding up and regaining the bull trend very soon. Jumping over to the Dow Jones, you can see we're pretty flat today, only going up 0.07%, so we're definitely cooling down a little bit, but again, the second day confirmation closing back above all the moving averages and extremely close to having the full bull trend. We just need a few more bullish price action breakouts and we'll be in the full bull trend in the Dow Jones. Your critical support level in the Dow is at 356, 355, and the full gap close, which is right around the 50 EMA, right around 354. So we basically have a support level every $1 lower in the Dow Jones, so the bulls are in full control. Look for the bulls to try to create separation from support, breaking out above 360 and start running to the previous all-time high at 365. On a breakout above 365, your brand new all-time high price target in the Dow Jones is up there at 372. So again, we're looking very bullish as long as we can stay above these critical support levels. On the Russell 2000, we were up 0.68% today, and you could see the price action is back above that old support trend line for the second day in a row. So we do have critical support right around 223.8 and the full gap close at 220.6, and I expect to see the Russell 2000 holding above all of those support levels. We still have resistance at the 50 EMA at 227 and the full gap close in 20 simple moving average at 228.6. And if we break out above that level, we're back above our resistance trend line and we're looking for critical resistance at 232. And back above that, we're back on the bull and we'll regain the full bull trend and we could start running to a brand new all-time high yet again. So follow that progression of resistance breakouts, and if we continue to see price action breaking out, it's very likely the Russell 2000 is just lagging behind and it's going back on the bull next. So watch those critical resistance levels and make sure price action is staying above critical support. On the Arkk ETF, we had a strong bounce today, going up another 3.11% today, and we're getting very close to that resistance trendline breakout. We need to see Arkk breaking out above the resistance at 105 and closing back above about 107 to about 108. That will tell us the downtrend is finally more than likely over, but we still do have a gap below right around 95. So if we get rejected at 105, it's more than likely we're coming back down to support at 98 or the gap close right around 95. which will still be a higher low. But again, we want to see an impulse of breakout, and we want to leave that gap open for as long as possible so that the bulls can get back up, back over the 50 EMA, which is right around 112. Arkk has a lot of damage repair because we have the full bear trend. So if we get rejected at any of these resistance levels, that could be a short trade as long as we don't break above that level. So you could be an Arkk bear at any of these resistance levels, but you need to be a lot more cautious if we start breaking out, because if we can get back above this 50 EMA, we could see a full-blown bottom in the Arkk ETF and we could go back on the bull. So look for that confirmation breakout to get bullish. Otherwise, you need to stay cautious and stay bearish as long as we're in the bear trend. On the VIX, we got the full-blown breakdown, which is a VIX close back below 20. So we're definitely seeing confirmation of the full bull price action, and it definitely looks like SPY is about to break out to new all-time highs. Remember that we usually like to see the second day confirmation, so wait for the VIX to close back below 20 for one more day if you're waiting for confirmation. But if you continue to wait way too long, you're eventually going to be buying at much higher prices. So remember, I always tell you to buy low and set your risk accordingly. And at these prices, the longer you wait, you're buying higher and higher, and eventually you're going to be the one FOMOing in at the top. The VIX is breaking down below 20, so we're looking a lot more bullish. And as long as the VIX is below 20, you need to stay on the bull. It's still possible we get one more spike of volatility, especially going into FOMC, and the more likely target would be the VIX to close the gap at 26.75, which could be another opportunity to buy the dip. I'm not guaranteeing that we're going back up to close that gap anytime soon, but obviously leave all possibilities open and follow all scenarios so that you know exactly what to do no matter what happens in the market. On Bitcoin, we're pretty flat, going absolutely nowhere and still trading below all the moving averages, and we still have that full bear trend. Remember, Bitcoin is very easy right now because we broke down below 53,000. You need to be very cautious, and the bears are in full control. You can't get bullish on Bitcoin until you see a break back above 53,000 and a close back above 60,000. You need to stay disciplined because it's very possible Bitcoin is going lower, because we could be coming all the way back down to retest this wick low, which is right around 42,000, and we still have support just below 45,000. So the longer Bitcoin stays below 53,000, it's more than likely we're coming back down to 45,000 or 42,000. So stay disciplined and don't get overly bullish. If we're coming all the way back down here, that's a much better buying opportunity. We're in the full bear trend and we don't have any bullish price action. So right now, it does look like Bitcoin is going to continue to trend lower. On Amazon stock, we were dead flat on the day, going absolutely nowhere and still closing just below our 20 simple moving average. We're back above the 50 EMA, but we don't have the bull trend. So we really need to see Amazon breaking out back above 35.30 and breaking above our resistance trend line at 35.63. If we can see Amazon breaking out, it does look like it will start running yet again and it will regain the bull trend. And we're still forming higher highs and higher lows, so there's no reason not to be bullish on Amazon as long as it's above this 50 EMA at 34.60. If we break below 34.60 and lose the support trend line right around 34.30, then you need to start looking at that support level at 3400. Below that, we're likely coming back down to 33.11 or 31.85. On Tesla, we were up 1.64% today, and we're definitely seeing the Tesla bulls trying to fight back and get back above that 20 simple moving average. We'll have strong resistance right around 1082, and if we can get back above that, we're looking for a retest of the median of the wedge right around 1145. If the bulls can get back above 1145, I think the bulls in Tesla stock will regain control and will more than likely see an attempt to break out above about 1160 to close the gap at 1208. Above that, you have resistance at 1240, and on a breakout, we have a price target at 1400. However, if we break down below 1,000, look for the gap fill at 909, and if we break below that, you're looking for the gap fill at 843. So you're looking for the very critical support at 1,000 and the resistance breakout level, which is right around 1145 and 1160. Everything else is just a trading range, and you can trade accordingly, but wait for those macro level breakouts to know if we're going much lower or much higher, which is going to be very easily defined by the 1,000 support and the 1145 resistance. On Apple stock, we were up 2.28% today, and we continue to see this macro level giant leading the market higher. We're going up on very high volume, we're going up on very bullish price action and a very strong bull trend, and there's no reason to think the stock market is going lower, while the market moving stock Apple is just blasting through resistance level after resistance level in a very strong bull trend. Remember that you need to stay objective, and when Apple is trading at brand new all-time highs every single day and just breaking out and closing at new price targets, you don't want to just assume the market's trying to roll over and die. It just makes no sense to think that way, and Apple is definitely a leading indicator that the stock market wants to go higher. We did hit that price target at 176 and clearly got rejected off of that level, and we're back above closing above the upper Bollinger Band, so we might need to take a chill pill, and we're either going to pull back or form a bull flag from this level before we go much higher. The next price target on a break above 176 is at 178, and the downside support levels are at 171 and the gap close at 168. We have a lot of support below, and you can see all of these levels here at 166 and 162, and our 20 simple moving average will be right around 160. So we could easily see a dip or a cool down period in Apple, and it can still remain bullish with a strong bull trend. So continue to stay on the bull as long as Apple is looking bullish, because we still have more upside, and at this point it looks like Apple might be trying to get to $200. I'm only saying that because we can see a lot of buying volume, and if we see this much buying volume this late in the bull stage, it's more than likely that Apple's price target is much higher than I previously imagined. Remember, we follow price action and we follow trend, and Apple is telling us that it wants to go much higher, but that doesn't mean we won't see a cool down period before. On the financial sector, we were down about 0.5%, closing right near that 50 EMA, and we're definitely seeing a test in the financials if we're going to close the gap above and test that resistance trend line or start heading back lower, so continue to watch the price action in the financial sector. The industrials are back above the 20 simple moving average for the second day in a row and starting to gain some bullish momentum, so it definitely looks like the industrials are trying to get up there to that resistance level and trying to break out. The healthcare sector was up 0.75% today, getting all the way back up to our resistance trend line, and it does look like the healthcare sector is going to attempt to break out or get rejected at resistance in the very near future. The energy sector was flat on the day, and it's definitely trying to break out of our resistance trend line, and we're back above all the moving averages for the second day in a row, so it looks like the energy sector is attempting to go back into another bull cycle. So jumping back over the S&P 500, we can definitely see a lot of bullish developments across the board in the stock market. We're seeing leaders like Apple leading the way higher at brand new all-time highs, and it looks like SPY could just be one day removed from a brand new closing all-time high. So when you see bullish price action and you're seeing signs of bullish trends developing, you want to follow the trend and you want to stay bullish, and don't forget we're still in a macro level bull market. If you're being a bull in a bull market, you'll be on the right side of the trade 9 times out of 10, and this is clearly still a macro level bull market, and it does look more and more likely like we're going to get that Santa Claus rally. We'll know things are changing if we start losing critical support, and we're staying objective, so we're ready to act accordingly. But right now, all signs are still pointing to bullish, and it definitely looks like we're going to see another brand new all-time high before the end of the year. So block out the noise and stay objective, and 9 times out of 10, you're going to end up on the right side of the trade. Also remember that I have Bank Trade Alert service, which sends you all of your buy and sell alerts directly via email and text message, and it only trades the ETF TQQQ, and I'm still running that Black Friday deal for 67% off your first month. If you're interested in joining Bank Trade Alerts and claiming that 67% off promotion code, you can find out all of the details in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.